Let's take a look at the stock Sofi to see what's happening and what has occurred over the past week. I'll definitely show you my portfolio and the positions I've added. We'll also examine volatility, support levels, and market forecasts. Let's start from the very beginning. These are the Sofi stocks. As we can see, consolidation continues here. Nothing much is happening. Last week we had growth, but now the stock is starting to fall again and has hit resistance at the $6.90 zero, which it can't seem to overcome. However, the trend is still quite downward. Let's look at volatility and what's happening there. Volatility is gradually decreasing, partly due to the consolidation. The more it stays at the same value, the lower the volatility will be. This is a market law. Let's take a look at the volatility smile. As we can see, the volatility smile here is a straight line, meaning volatility slightly increases towards the downside, towards the put options. Overall, as we can see, this is a straight line, indicating that volatility isn't growing. Again, this is partly due to the consolidation of this stock. Now let's look at historical and implied volatility. As we can see, these two volatilities are close to each other. This is actually a good sign, as this is how volatility should look. Historical values match the current volatility, but this isn't a very good sign for traders because it doesn't provide an opportunity to profit. Again, I always show you some strategies that artificial intelligence helps us compile. I'll also show one of these strategies just as an example of what can be done. We can assume that volatility will drop by 20%, which will happen in mid-August. Again, I mentioned that you can trade not only the stock itself, but also its volatility, and artificial intelligence helps us make calculations. Let's look at this strategy. We are suggested to sell a put option with a $7 strike price and sell a call option with a $7 strike price. This is called a short straddle, a popular but quite risky strategy, because if the company suddenly starts to grow sharply in any direction, we could lose money. However, during consolidation, yes, we win here. But again, this strategy needs to be managed. I will show you the profit profile. I think we could incur significant losses. We can also compare this strategy with others to see how it measures up. I showed you this solely for educational purposes, as I do not recommend trading via artificial intelligence, bots, or bloggers. It's better to think for yourself. Now let's look at the support levels and the trading volume of options, which is a crucial point. We see that the main volume is concentrated at the $7 level for both call and put options. We can't seem to overcome this volume, which acts as significant support. Although there might be a slight error, the price remains within the $7 range. There's also substantial resistance at the $7.50, $8 levels. This suggests that it will be very difficult for the stock to rise due to these strong resistance walls. This indicates that after such consolidation, the stock may start to decline. Again, if we fall below these levels, a more serious drop is quite possible. I'm drawing this conclusion solely based on the options data, but there's no need to worry because the company is becoming profitable. While it might fall in the short term, it has potential, and I believe the stock will be worth much more in the long term. However, a more short-term forecast likely points to a decline rather than growth. Now, let's look at the 3D volatility. As we can see, concentrated volatility includes all the information on volatility, expiration dates, and strike prices. This is the basis for how I build my strategies. So let's take a look at my portfolio. There is a new position here, 2 sold put options with a $7 strike price. Let's look at the table. As we can see, I have sold 2 additional options. This is also for buying the stock, because my goal is to acquire Sofi shares, and one way to do this is through purchasing these options. This is important because even if the stock starts to fall, I don't lose anything here. I will let these options expire, receive the stock at $7, collect the premium, and be satisfied with the deal. Then, I will form new positions. This table is available in the description, and anyone can check what I'm doing. Since consolidation continues and nothing significant is happening, I am acting very cautiously. Some might ask why there aren't many trades here. I say that the main thing is not to rush. You should watch and open positions only when you are confident. Since there is no movement yet, I'm not in a hurry to open positions. I also remind you that I cannot predict price movements. I have no idea where the stock will go. My main task is to manage the portfolio effectively, which is exactly what I'm showing you. This involves selling options at the right time, buying options to lock in profits, and so on. This is what I do, and regardless of where the stock goes, I aim to make a profit. That's the secret. However, I'm currently waiting because I don't know where the stock will go, and I'll build my strategies based on new data as it comes in. The key is not to rush, because profit won't disappear. Let's look at the market forecast. For example, the market forecast for mid-August shows that the expected price range is between $6 and $7. This suggests that the market expects the price to stay within this range, with a slight possibility of a decline. There's also a 20% chance that the price will be between $7 and $8. If we look at a longer-term forecast, for example, for September, the market predicts a similar range of $6 to $7. Essentially, nothing changes here. It seems likely that the market expects the stock to remain in the same range. Recent reports have been very positive. The company is becoming profitable, and if this trend continues, it might close the year with a profit, which would be a completely different story. I believe in the potential of this company and its good prospects. If you are a long-term investor, it might not make sense to frequently buy and sell. You can use hedging with put options, but you need to do it wisely because high volatility can be detrimental. If you believe in the potential of this company in 5 or 10 years, the stock could indeed be worth significantly more, maybe $30, maybe $50. I consider this entirely possible. And again, there's no need to worry about price fluctuations. If the market starts to decline sharply, or if a recession begins, Sofi's stock could also drop to $5 or $6. However, it doesn't make sense to sell at $6 or $7 and then buy at $5 because nobody knows for sure if the stock will reach that level. Therefore, a good strategy is to hold on to the stock and monitor the positive reports they are starting to release. Sooner or later, this will naturally reflect in the stock price movement. Also, I have important news. I've launched a new experiment to create a new portfolio from scratch. Yes, we've been planning this for a while. The video is already recorded, and you can watch it. This new experiment starts from zero, meaning I will build a new portfolio entirely from scratch. All the revenue from YouTube monetization will go towards funding this account. Unlike the Sofi stock portfolio, which is a virtual portfolio where I demonstrate the trading logic, this new portfolio will be entirely real. I also recorded a video about the trader's journal, where I will document all the trades. This will be fully accessible, and anyone can check and see what trades I've made. Make sure to watch it. We've been working towards this moment for a long time. Anyone can access and view all my trades for free. I think this will be very useful, and we will definitely aim to outperform all indices. So subscribe to keep up with this experiment. Good luck to everyone.